Hello, I'm Liz Lumley of Finextra, and joining me today are Marcus Sehr and John Ball, both of Deutsche Bank. So, John, I'm going to start with you. I want to get into a question a little bit about the challenges banks and your clients are facing. And I mean, obviously, regulation is always going to be a huge issue. But, what is the long-term outlook for transaction banking and specifically payments?
Maybe just talk a little bit about regulation first of all, as you've raised this as a very hot topic.
Favorite topic.
Absolutely. Look, I think we've been dealing with increasing regulation for a very long time, and we've seen so much development around things like SEPA, Basel III, FATCA, Dodd-Frank. All these things have been huge challenges for banks over the last few years. I think, though, that for us, this is sort of nothing new. This is something that is there. It's going to be there for the long term. We have to deal with it. We have to get on with it. I think it presents us with some opportunity as well, though, because for us as Deutsche Bank, it enables us to have a very good, intimate dialogue with our clients around these issues. And it also enables us to develop product that we're able to position against many of these regulatory changes as well. So that's a very, very important factor for us. I think on top of that, it's also created a consolidating environment as well, where frankly the big banks and the banks with scale are going to be able to invest to be able to deal with these regulatory challenges. A lot of the banks that are at the periphery are finding that much more difficult. So one of the unintended consequences has been this consolidation. Yeah. As it relates to payments and what's going on in the payment space, we're seeing payment volumes still growing, very nicely despite the environment that we're in. I think that is fueled by the continuing increase in trade, the continuing increase in the consumer society in many of the emerging markets around the world. And of course for us, it goes back as well to this consolidation point that I raised earlier, that we're just starting to see more and more traffic coming through our network. So for us, the outlook for transaction banking as it relates to the payment space, very positive.
Very positive. Yeah, I mean, and it also collaboration and consolidation are the two words I've been hearing a lot
Absolutely.
From the banking industry.
Sure.
So, you're positive outlook. So I'll move it on to you, Marcus. If the long-term outlook is positive, are we going to be looking at the next C word, competition? Are we going to be seeing increased competition in the transaction banking space?
Indeed, the long-term outlook is very, very positive. And also, if you look at the fundamentals in these days, it seems that global transaction banks tick all the boxes which are deemed important in these days. If you look at low risk-weighted assets, if you look at low cost-income ratio, if you look at high return on equity, if you look at stable income or stable profit, so you could expect that any bank in the world wants to build a global transaction bank. But if you want to build a global transaction bank, you need two things: spend in technology and scale. Scale is critically important because the cost structure of a transaction bank is very much depending on a high fixed cost base and low variable cost. This means you need to have scale in order to produce at a low per unit cost. The other thing is investment in technology. So every transaction bank has to continuously invest in technology. You just can't spend for 2 or 3 years and then say, oh, I stop it for a period or two, because this is clearly the exit of the business. But if you continuously invest in technology, then you achieve some kind of scale efficiency, and with that scale efficiency, you also have the free budget to invest in innovation. And this innovation keeps you competitive. And this continued investment is a critical success factor for a transaction bank. And this probably explains why we only have a handful of real global players in that business.
So you brought up these issues of technology and having proper investment in technology. But what role does thought leadership play?
Besides being innovative on the product side, I think there are two aspects to thought leadership. And one is clearly to have an active representation in industry forums and in banking associations. John mentioned the ongoing new rules and regulations which the industry has to deal with. And we have to shape this industry. And I think it's fair to say that especially the payment industry is probably the discipline in banking which is most interconnected and highly depending on STP. So our task is to strive for efficiency in order to future-proof the business, not only for Deutsche Bank, but as a whole for the industry. And it goes without saying that if we are present in industry forums or banking associations, we not only speak for ourselves, we also speak for our clients. The second aspect of thought leadership is then that you share this insight and that you share this knowledge with your partners. And in order to achieve that, we have established a couple of forums and platforms, including a transaction banking forum, seminars, customized training sessions, newsletters, and webinars, in order to bring all this insight and this knowledge to our clients and to our partners.
And of course, involvement with EBA Day.
This is a perfect example.
Exactly. So, John, I want to move to you. I wanted to touch a little bit about the current low interest rate environment. You know, it's clearly not helping anyone's business for banks, but, you know, what measures do you have in place you know, to kind of offset that revenue depletion, and both for yourself and your clients?
Well, the low interest rate environment is nothing new. We've been dealing with this for quite a number of years. And frankly, we sort of saw this coming to some extent. So we have obviously tailored more and more of our product offering into the fee category as opposed to the balance-based category. We've also focused a lot on innovation. We have been able to bring new product to market, which I think has been very effective. I mean, I think a few examples of that would have been the investment that we've made in some of the sweep arrangements that we have for clients, so that we maximize their returns on those balances that they have in a very low interest rate environment. We've spent a lot of time developing our Autobahn app market, which is essentially our way of being able to deliver effectively to the client base information, execution, analytics. One of the most popular apps there has been our Liquidity Manager application, which enables clients to track liquidity in real time across currencies and across regions, etc.
That's a big issue for clients. Yeah.
Absolutely. Thirdly, we've invested in a liquidity optimization product in Asia, which we call Asia Accelerator, making the best use of liquidity in the Asia time zone to execute payments. And then finally, ongoing investment in our FX for Cash platform, because clearly we have a growing demand for FX payments in multiple currencies. So we're now able to execute across 126 currencies in the world, and a very large number of clients that we're now dealing with in both the FI space and in the corporate space.
So, during this talk, we've mentioned two of the three C's. You mentioned consolidation. You talked about competition. I wanted to turn to you to talk a little bit about collaboration and collaboration models. And a lot of strategies banks are working on sort of understanding mutual partnerships. What does that mean to you and to the bank?
I think what it means to us and means to the bank, but also what it means to our client, is that first of all you have to have clarity about your business model. You have to be clear about who you are and who you're not. You have to be clear about where you're going and where you're not going. And it's probably even more important to know where you're not going, so in order to avoid any kind of misspend of a limited IT budget or a limited budget you have. And we, for example, as Deutsche Bank, we have decided to become a partner for our FI clients and have them leverage our investments in technology and have them leverage our scale. And this perfectly fits with the model of a regional or a local player, which has usually outstanding relationships to the local and regional customers, but they are missing the global footprint. And what we are giving them is the global footprint. And if you combine both models, outstanding relationships with local and regional customers and the footprint, this is a mutually reinforcing business model for both parties. We, as a global player, then partnering with the local and the regional banks.
That's a theme I'm hearing often over and over again, the local relationships and then the global support. Yeah. Thank you both. Thank you, John. Thank you, Marcus. Thank you both.